when I saw all these prices just shown on the screen before, you obviously get a little bit nervous because everyone is looking for higher prices. But I think still that is justified. I saw that you were showing $2,300 from Saxo Bank. We have since raised that to 2,500, and that's where we still see prices move towards the end of the year. The factors that has been driving gold higher now, especially for the last year and a half to 2 years, remains the same. And we all know the geopolitical risks that are in the world right now. We see the central banks are strong buyers of gold, and that will likely continue. We see an enormous amount of debt being accumulated by governments around the world. That is creating some nervousness as well among some investors. But adding to this, and now into the coming months, is a prospect for lower rates in the US, and with that, lower funding costs of holding gold. And I think all these added together basically points to higher prices in the coming weeks and months. The only thing that really could, or the few things that could drive prices lower, is if we see some of these current nervousness around economic growth doesn't materialize and the Fed does not cut rates, then perhaps we could see a correction. But generally, we see prices higher. I think in the short term, it may have a small negative impact. And that sounds a bit strange, but I think we have to remember that a lot of, as you mentioned, a lot of rate cuts has now been priced in within a very short period of time. I think that may be a little bit too optimistic. And I think also the recession fears are also lower than what the market is currently expecting. But I think generally from a longer term perspective, what gold needs right now is lower funding costs. And that funding cost will come down fairly soon and will continue to come down for a while. So I think it's more the fact that we see the beginning of the rate cutting cycle more than how aggressive it will be that will continue to underpin the prices of gold in the coming months. And that, I think those rate cuts will start to come, even though we avoid a recession in the US.